welcome. You're watching Business Today Television. This is Market Today and I'm Sakshi Batra. Welcome to a new trading session. Remember, the Federal Reserve's rate hiking cycle may have finally come to an end. This statement really came as music to the ears of global equities, including the Indian markets as well, as they rallied midweek, trading and continuing from where the US markets had ended overnight or after the softer than expected inflation print as well. The Nifty, remember, closed at the highest level in a month yesterday, but will the momentum continue is the big question. We will tell you all of it, but first up, the top headlines we're tracking for you this hour. Indian stocks are likely to consolidate on muted overseas cues, even as the Nifty undergoes its weekly expiry on Thursday. The Lal Street's undertone is bullish as autos, technology and banking stocks see a fresh bout of delivery-based buying. Bajaj Finance is likely to undergo further pain after the Reserve Bank of India restrained the lender from offering loans under two of its products due to non-adherence of the central bank's digital lending rules. Bajaj says it's rectifying the deficiencies. Welcome back. You're watching this fresh and new edition of Market Today, and we have a very positive handover as far as the Indian markets are concerned. A very strong move in yesterday's trading session. The global market cues are also positive, and it's not just the global cues, but a slew of brokerage houses updates as well that have issued bullish calls on Indian equities. Morgan Stanley last week had pegged the sensex target for 2024 at 74,000, while Goldman Sachs also upgraded India to an overweight as well, projecting mid-teens earnings growth over the next 2 years. And for the first time after nearly a month, we've also seen the foreign institutional investors coming as net buyers in the cash market on Wednesday. That also explains the kind of rally the indices really witnessed yesterday. Remember, domestic institutions continued to remain net buyers as well. 610 crore rupees bought by the DIIs, while FIIs bought 550 odd crore rupees worth of shares in the Indian markets. Now, from November 1st lows, the Nifty has now recovered nearly 700 points in trade. The index has now gained in 3 of the last 4 trading sessions as well. When we talk about the Nifty Bank, it has gained in 4 out of the last 5 trading sessions and now eventually closed above the 44,000 mark as well in yesterday's trading session, up by 0.7%. The Nifty, the Sensex, the Nifty Bank all were buoyant in trade. The small cap index, not to forget, touched record high levels as well. So the setup is quite bullish. But will this continue to sustain as a momentum is the big question. Let's now welcome our guest on the show. Vineet Bulinchkar, Head of Research at Ventura Securities, now joins in. Welcome, sir. Good morning to you, and thank you so much for taking the time out. I want to understand from you, how are you looking at the markets, the recovery that spanned out in the last few trading sessions, and will the momentum sustain as per you?
So it's like Diwali never got over, and we're going to see a very bullish market playing out. A perfect storm has gathered in the sense that the interest rates are coming off, the dollar index is down, and you have the geopolitical situation kind of clearing up, not only in the Middle East, but also in kind of Ukraine and Russia. Things seem to be getting sorted out. One more factor which is now brewing up, which can fall in favor of the global equity markets, is the Chinese sheeping visiting the US, and some kind of ice breaking happening out there with
Yes.
China is really deficit of funds. So I believe that all these factors, geopolitical macro, are aligning very nicely for the markets. And the dollar index falling the way it did the other last couple of days, I believe that a lot of fund flows are moving now towards the EMs, and India will be a very big beneficiary. So we are sticking our neck out and calling for a very strong bull market going into the end of the year.
Okay, a bull market by the end of the year as well. Let's also look at how the global markets are shaping up. I mean, the US markets continued for the fourth straight session, on the positive zone on the easing of inflation numbers as well as hopes of a rate cut now coming in sooner than expected. Dow Jones, Nasdaq, S&P 500 all were up in trade with the Dow half odd percent higher in trade as well. The markets now expect no more Fed hikes. And the first cut by May of 2024. 97% of the stocks in S&P 500 yesterday closed higher, and it was the best day in 12 years for the index as well. The Asian markets have somehow seen some profit booking in the early morning trading session. You've actually seen the Nikkei, Kospi, Hang Seng, Shanghai all are now dipping in trade, with the Hang Seng losing the most, about 1.7% lower in trade, and the Gift Nifty also indicating a flattish to moderate start for the Indian markets as well. I wanted to understand with you, Mr. Bulinshkar, why are the Asian markets not reflecting the mood in the US markets? Is it the overbought zone, perhaps fears now kicking in as far as the US markets are concerned?
I think, immediately what happens is you start putting your earnings perspectives and the yields, and the relative valuations come into the play. But I believe this is going to be a short-term move, nothing to worry about. And the market should regain their momentum in a day or two, and the market should rally up again.
Okay, but do you think that this rally comes on the back of fundamentals, or is it a pre-election rally also that you expect now?
See, all of it will get built in. Another thing we have to also keep in mind is that the US also goes into election 1 year from now. And, we've rarely seen election years being damn squib years. So, it portends that we will see a good rally into maybe April going out into the US.
Okay, fair enough. Let's talk about a few stocks. Have you spotted any stocks in the recent run-up that you're now turning bullish on? Anything that you'd like to suggest on a positional basis for all our viewers?
So I think Aisha Motors has, completely weathered the storm of new launches and has been a very, very strong outperformer compared to the, challengers, that is Hero Motors and Bajaj Auto. So that stock looks very, very good. Additionally, I think that the PSU banking space, if you see the indices are in new high territories, and they're a very, very strong momentum trade out there. So that looks very, very good.
Any
Uh,
particular targets that you'd like to share for Aisha Motors, sir, in the long term?
so we have a buy call on iShares with a target of 4,300.
4,300. That is a substantial upside from the current level. In the last 1 month, Aisha Motors has definitely pushed 10% higher in trade, 8.6% higher in last 1 week alone is what we've seen for the stock. 38, 48 kind of levels coming in, near all-time high levels, of course, and 4,300 as the new targets coming in for Aisha Motors. Apart from the two-wheeler stock, anything else that looks positive to you, sir?
So counters which have not been moving, they're not momentum plays. Maruti is also showing indications of bullishness. We are quite positive there. And we also like SBI as a value play, given the fact that, the stock is around 585 levels. It's one-time earnings for FY26. So 1.1 times inclusive of the earnings of the subsidiaries, if you include, So I think that is another counter which can do well.
Okay, and so for SBI, what is the target that you would recommend?
So we are a very, very high stretch target. So over the next 2 years, we think that the fancy will catch up with the SBI stock. And
Okay.
in accordance with this, we think that, you can easily get a 15 to 20% upside going ahead.
Okay, 15 to 20% upside on SBI shares as well. Of course, this share was a great performer of the recent past, but like the previous year. But this summer, that has not really done that much. If we see last 1 year perspective, it's actually down by about 2.5%. But before that, it was a stunning rally that we had witnessed on the stock, right from 191 odd levels to about 580 kind of levels that we have seen. But the kind of move that, you have actually witnessed perhaps in the last 1 month is also down in trade about 1 odd percent. Last 6 months also slightly lower. So this could be a good time to perhaps accumulate it for a 15 to 20% upside on SBI as well. The stock that I wanted to discuss with you also is Bajaj Finance. That's going to be on the top watch list today, as the Reserve Bank of India has now directed the company to stop sanction and disbursal of loans under the two lending products, Ecom and Insta EMI card, with immediate effect. And in response, the company has said that no material financial impact, however, is expected due to this action. But how do you expect Bajaj Finance? Yesterday also, when the whole market was up, Bajaj Finance was not really participating. Perhaps was this news already getting baked in, and now that the news is out, do you see further impact on the stock?
So, this stock has been laggard with the markets for a very long time, not only in the recent past, but since its announcement of its, fundraise, the stock has really, really performed very badly compared to the sensex. And
Mm-hmm.
I think that this little softness may continue for a while, but investors who would like to play the contra game and would want to get into stocks which offers over the next 2 years a good run, Bajaj Finance can be sipped into.
Okay, Bajaj Finance can be looked at. What about from the IT pack, the leader of the pack? TCS is something that I wanted to discuss as well. The news flows are such that November 25 has now been set as the record date for 17,000 crore rupees share buyback. What does this really mean for the company, for the shareholders, existing shareholders, and for anyone new who wants to enter TCS at this level of 3,400 odd?
So, I have differing views on the IT stocks. I've always held them. And, if you've seen, the markets have been an underperformer.
Yeah.
So I believe that, the existing investors should offer this stock, TCS stock. And a couple of reasons why the stock is going to be up along with the IT packs is because of Tata Technologies IPO getting announced. And
Mm-hmm.
second is we've seen the interest rate cycle ebbing. So, we have
Yeah.
seen a thrust towards that. But, contrary to this is the dollar index, which is kind of coming off a bit. So there is a risk out here. And so you should use this buyback to surrender your shares. Having said that, in positivity of the sector as well, I would like to mention that, their order book has not come off as dramatically as one would want it to, given the uncertainties plaguing those markets.
Mm-hmm.
Hirings have also picked up there. But, with increasing automation, if you cannot churn your services business to a higher end products, then there would be a issue with your margins and consequently profits. So we still have a wait and watch approach on this entire sector, and I would refrain from sticking my neck out on this stock.
Okay, since you briefly mentioned on Tata Technologies, this is something that everybody has been waiting for, because an IPO from Tata Group after 2 decades, and now the price band has been fixed for Tata Technologies for the upcoming IPO, 475 rupees to 500 rupees a share, and this much awaited IPO will open for subscription from November 22nd until November 24th as well. And ahead of the issue opening, the shares of Tata Technologies in the unlisted market are already in heavy demand. Grey market premium has shot up to almost 300 rupees as well. And also, when we talk about the kind of of course, this will be an offer for sale as well from TCS, from Tata Motors, which will all offload their shares in this issue as well. How are you looking at this opportunity of the upcoming IPO, and do you think that investors should definitely keep an eye out on this Tata Group stock, and perhaps also look at grabbing Tata Motors and TCS shares right ahead of this IPO as well?
So, let's understand the business. They do about 4,500 crores of revenues full year, and in the half they've done about 2,500. So, there's the growth rate is pretty intact, almost growing 20 to 23% as per the trailing numbers. Margins are around 18%. And so, I don't think that the valuations are very, very steep. There is good interest in the stock. And vis-a-vis growth, I think this stock will definitely have good demand, and this should keep the mood buoyant. and investors should try to get into this in the IPO.
Okay, investors should definitely look at it in the IPO, but for a larger audience as well, could you also help us really explain to us what is the difference between the three tech companies now that there will be after this IPO from the Tata Group? One will be TCS, one will be Tata Technologies, and one is the already listed Tata Elxsi as well. So, how should one be really differentiating between them? How does one really take which stock suits which portfolio? That decision really.
So, Tata Technologies is a little bit of a Tata Elxsi as well as a TCS thrown in, but let me try to make this model very clear to investors, is that they are not only into the business of product enhancement, they are also into product development, and they do a lot of CAD/CAM processes that Tata Elxsi does, which are nouveau age businesses. And apart from this, they also do a little bit of retailing of reselling of software required by their incumbent clients, and also provide training on their productivity and use of these software. So they have three, four lines of businesses all aligned to each other and very focused on verticals.
Okay, we'll continue the discussion on Tata Technology. Sir, just briefly let me point out to all our viewers in the pre-opening action, there is a slight dip that we are seeing as far as the Nifty is concerned. 19,652, down about 22, 24 odd points is what we see Nifty opening with, just about a 0.1, 0.2% kind of a dip as far as the opening is concerned. As far as some of the listed stocks are concerned on the Nifty pack, we do have some move coming in on stocks like Nestle, Maruti, Ultratech Cement. These are the stocks that are showing some buoyant move. 10,500 for the Maruti stock, Ultratech Cement at 87.89, Nestle at about 24,174 kind of levels. Then we have Bajaj Finance, which is down in trade almost 2 odd percent at this point in time. Bajaj Auto at
Great.
5550 is what we see. Currently, Dr. Reddy is at 5420. We'll come back to all of these stocks as they settle down, but we were discussing about Tata Technologies, so we will continue that discussion too. Mr. Bilinchkar, another important aspect that investors need to know is that, how much beneficial will it be perhaps for investors to lap on to Tata Motors shares before the IPO really gets opened, and in case there is more detail coming out on reservation on Tata Motors shareholders too.
So, a couple of things that we need to understand is, just give me a minute before this.
Absolutely.
Yeah.
Absolutely.
Yeah. So one of the most interesting aspects that we need to understand is that Tata Motors has guided quite nicely on the European business, that is JVLR, on enhancement of margins. So while they're talking of 6%, they used to do 4%, then they're targeting 6, and future it's going to go to 8%. Additionally, you are having a very, very sweet spot in the Indian markets as far as auto sales are concerned. Third thing is that now with the Tata Motors offloading part of its stake, a lot of money will come on the books. This will go to pay off some of the debt, and the intention to minimize debt on the part of the group is a very, very positive sign. And we have a target of around 730 on the stock, which I think we would be re-rating again once
Okay.
we are, okay with the trajectory.
Okay. At this point in time, let me also welcome our other guest on the show. Joining us now is Rajesh Palvia, Head Technical and Derivative Research at Axis Securities. Rajesh, good morning to you, and thank you so much for taking the time out. Your own sense of the weekly expiry, how do you see the markets to tread today after the stunning move of yesterday? You're seeing the pre-opening action show slight dips, although coming off the low point, and we are now flattish at 19,675. But what is the sense that you're getting on the Nifty? What is the range that you expect the Nifty to trade at on the weekly options expiry?
Good morning, Sakshi. So, looking at the setup for Nifty, it's likely to be on the bullish side only.
Okay.
If we get any, opportunity to buy Nifty in dips towards 19,600, that's a good level again, to buy Nifty in the decline. Uh, if we look at the put concentration, the major put writers are now aggressive at 19,500, 400, even 19,600 strikes. So that clearly shows base is now shifting higher,
Mm-hmm.
and Nifty is very well placed about to the major call concentration area of 19,500, 19,600 strikes. So that clearly shows that if at all Nifty holds above 19,600, then there would be the bullish sentiment is likely to remain in the market, and we may see stock specific action for Nifty. The higher side, the supply zone at this moment is exists at around 19,800. So that level is going to achieve in next couple of trading sessions. So 19,800 is the area where we are focusing for
Mm-hmm.
Nifty target at the current level. On the downside, 19,580 should be your stop loss. For Bank Nifty, the setup is looking bullish as we are trading above 44,000 level. So till we are holding above 44,000 level, trend is likely to remain on the bullish side. One should remain on the buying side of the market. Once Bank Nifty crosses above 44,400, then another round of short covering would trigger, and then possibly Bank Nifty may also contribute to this upward momentum towards 44,800 also in the continuation of this pullback. On the downside, one should keep a stop loss of 43,900 to hold their long position for on the banking stocks as well as in the Bank Nifty.
Okay, so that's as far as the strategy is concerned on the Nifty and the Nifty Bank. From the FNOQs, are you watching anything, Rajesh, for today? Any particular stocks that are on your watch list?
So I think one should focus on Apollo Tire, very strong setup in terms of technical as well as in the derivative side. Looking at the overall structure, we believe that Apollo Tire can continue further more upside, and possibly in the continuation of this uptrend, we may see a target of 445 to 450. One can buy this stock with stop loss of 422. Another stock is from a real estate space, and that DLF is looking very promising. Series of higher top, higher bottom formation. Derivative data is also indicating that there is a long built up for series on series. And looking at overall structure, we believe that DLF can continue further more upside towards 645, 650. So one can buy DLF also with stop loss of 615. These two stocks one can focus, and third stock is Bharat Forge. After
Okay.
a corrective move, Bharat Forge is started recovering, and in the last session we have seen a strong buying action. Looking at overall structure, we believe that Bharat Forge may continue further more upside towards 1090 to 1100. One can buy Bharat Forge also with stop loss of 1045.
1045. Okay, got that. So three stocks on the watch list for Rajesh for today: Bharat Forge, Apollo Tyre, and DLF with targets and stop losses already discussed. Vineet, would you throw behind your weight as well on any of the stocks discussed by Rajesh? Do you think there is anything structurally that one can look at in either of the stocks?
Interesting case. I believe that the tire industry is on a sweet spot, and it should be doing well.
Tire stocks are definitely going to be the flavor. Even yesterday, we did see a lot of tire stocks buzzing in action. So that's something that we will continue to watch out for, even when the markets open as well. Right now, on the Nifty, it's a flat trade, 19,674 as the pre-open trades are settling. We're seeing TCS up by 0.7% odd, NTPC up 0.6%, HCL Technologies half odd percent higher in trade, Adani Ports also half odd percent higher, Infosys again in action 0.4% up in trade. Then we have Tata Motors almost 0.3, 0.4% up in trade as well. HDFC Bank, that's up by 0.3% odd as well. So the Nifty IT is the one which is gaining ground again today, following up after yesterday's move, 0.4% higher. Oil and gas, realty stocks, both the broader market indices The small caps and the mid cap 100 indices and the PSU banks, these are the ones that are looking positive. On the downside, as far as the pre-opening trade is settling, we are seeing metal stocks still dragging in trade. Remember, yesterday this was a very bright spot, and financial services, that's largely led by the downtick on Bajaj Finance counter, that seems to be opening in the lower zone today. Of course, the market breadth right now looks divided because a lot of stocks in the red zone as well, but we will wait for the opening to settle and we will then focus on the kind of stocks that there are as well. Mr. Bulinchkar, I wanted to understand from you on the mid and the small cap space. Of course, this is the space that really outperformed in the previous Samvat. The small caps up 37%, 32% higher for the mid cap 100 index as well. There was a lot of talk about how things should perhaps start to shift towards the large caps. Where are you at in this space? Do you also believe that it is the large caps which will take the lead in this new Samvat, or do you still see value in the broader market space, looking at even yesterday how Nifty small cap 100 index touched record levels?
So we continue to remain buyers in the mid cap and small cap space. The allocation is equal weight large cap, mid cap, small cap. So there is a lot of value in the large caps, and we will see value discovery come here eventually. And but the earnings growth story which is there in the mid cap and the small cap space you know uh, continues to gather momentum. It's not slowing down, and we believe that these sectors will continue to do well.
Okay, mid and the small caps should continue to see some more buying coming in as well. Mr. Palvia, anything from the mid and the small cap space, a stock that you could talk about where you still believe there is enough value that investors can scout for? Anything that attracts you in this smaller band?
I think from banking space, City Union Bank is looking promising. Looking at the overall structure, we believe that this bank can continue furthermore upside from the current level. Overall, on the weekly chart, the stock is moving in up sloping channel, and looking at the near term, short term structure, we believe that 155, 160 could be the next target on the stock on the higher side. So one can look at the City Union Bank. Another stock that we like at this moment from banking space, that is Bandhan Bank, is also looking promising. After a corrective move, now stock has formed a base and now recovery is taking place. Looking at overall structure, we believe that Bandhan Bank can scale up to the level of 240, 245 in the due course. So one can look at Bandhan Bank also with stop loss of 210.
Okay, Bandhan Bank and City Union Bank. So staying with the banking space itself, Mr. Bulinchkar, your own sense, first in the PSU banking space, this space has been a clear outperformer in the previous Samvat as well. And even then, many of these PSU banks are still under 100 rupees. So they have a very attractive price point that investors may be looking at. But then there are also news flows coming in, reports suggesting that the governments may now be looking at some offloading of stake as well. How do you see the Nifty PSU Bank and some of these stocks that have been clear outperformers to move now amid all this election news?
See, divestment from the government's point of view will obviously be a regular event. It should not surprise you. But the business fundamentals are catching up with the larger peers. Just check out the ROEs; they're very strong. ROAs are now moving up, and the credit growth is very strong. Uh, Asset quality is under check, is some of the best in class. And then why should the valuations be so out of whack as far as the private sector banks go? So we believe that there is a lot of room for upside coming in. It's going to be a slow grind because people have burned their fingers over the last 10 years. Some of people are not convinced that this story is just a one-off event where the government capitalization and the sharp reduction in NPAs has panned out, and going ahead NPAs will go up. So we believe that the NPAs would rise a bit, but that's part of the cycle and it's not going to adjust dramatically higher. Today, if you were to go and buy a vehicle just for sorts, they're so stringent with the CIBIL score, especially the domestic banks, that you will have to first go to a private lender in case your credit rating is not very high. So they're very, very focused on credit scores. They're very, very focused on the asset quality. And to my mind, with the growth, with the earnings growth abound, the credit strong, and asset quality under check, I think there is a substantial money to be made in these stocks.
Okay, we will shift focus to the market opening now. The Nifty is now opening 19,655 odd levels can be seen, about 23 points lower in trade, 0.1% lower. For the Nifty Bank, it is 44,161, about 0.09% softer in trade, about 41 points lower. As far as the other sectors are concerned, we do have a mixed opening as far as the markets are concerned. The Nifty IT is the top gainer, 0.4% higher. Oil and gas follows, about 0.4% again. Healthcare stocks are up in trade, about 0.2% odd. The mid caps are higher by 0.1%. Looking at the rest of the sectors, they're all slipping away. Right now, the top drag on the index level, on the sectoral index level, is the metals pack. That's 0.25% down in trade. FMCG, Nifty Next 50 is slightly lower. Then we also have consumer durables, private banks, Nifty Bank, and the Nifty auto space also softer in trade. But the margin of decline is not too much. It's just about 0.1, 0.2% lower in trade as well. As far as the Nifty gainers are concerned, ONGC, top gainer, 1.2% higher in trade. We also have Dr. Reddy's Laboratories. That's 0.5% higher in trade as well. BPCL up in trade. So the oil and gas space is coming in flavor. TCS, Coal India and NTPC, Energy Basket continuing to move. HCL Technologies up by 0.4% as well. You also have Hero Motocorp, Infosys, all up by 0.3% odd in trade. Let's look at the top drags at this point. Bajaj Finance, Bajaj Finserv, no surprises there. Down by 2.7%, declines coming in after the RBI news flow. Power Grid, Titan Company, HDFC Life, Bajaj Auto, these are all the stocks that are down anywhere between 0.5% to 2.5% declines coming in. Second day in a row running, we have Manappuram Finance as the top F&O gainer. Remember, after some sharp 8.5% moves yesterday, it's again up 2.5% in the F&O space. You also have Chambal Fertilizers, HPCL, ONGC again as some of the top movers as far as the F&O space is concerned. Rajesh, let me quickly come to you. Your own thought of the market opening and any particular stocks that have caught your eye now.
So, market opened on a support level. 19,600, 620 is the immediate support area. So I believe that, one should wait for another 5-10 minutes. If at all Nifty not breaks below 19,600, 620 level, then it's again, buying opportunity in the index. And we believe that, again, pullback action should be there in the market after, 10-15 minutes. And towards 19,700, 720 is the range where market can again show some upside momentum from here onward. For Bank Nifty, again, we are opened around near the support area of 44,100 on the Bank Nifty spot. So 44,100, one should look at for next 10-15 minutes. If it's not breaks below those level, it's again, buying opportunity in the Bank Nifty also.
Okay.
Looking at the opening, we believe that there is a traction in most of the fertilizer stocks. Chambal Fertilizer is looking promising. Overall structure is bullish as stock has already moved up to the 300 level and holding those level since last couple of trading sessions. So looking at structure for Chambal Fertilizer, we expect this momentum can extend further towards 325. So one can buy Chambal Fertilizer after this opening with stop loss of 307. Another stock that we like at this moment is from defense space, that is HAL. Stock managed to give breakout of its previous swing high. Looking at the structure on the daily weekly time frame, we believe that HAL Hindustan Aeronautical can continue for the more upside towards 2200. So that's one can look to buy at this moment with stop loss of 2085. And the third stock that already discussed, Bandhan Bank, that is
Yeah.
also showing traction post opening. So one
Okay.
can look to buy that stock also for near term to short term trading perspective.
Near-term to short-term trading perspective, Bandhan Bank discussed pre-open as well, showing some upticks over here. You can continue to focus on that. Mr. Bulinshkar, I wanted to discuss with you Apollo Microsystems. Rajesh pointed out on the defense space. Of course, defense is another pack that has really performed very well in the previous somewhat. HAL is something we have widely discussed. We've discussed the shipbuilder stocks like Mazagon quite a lot, Cochin Shipbuilders. But Apollo Microsystems today, it's up very, very sharply, almost 10% higher in trade, 146.7 at this point in time. Your own sense of Apollo Microsystems, do you track the stock?
No, I don't track this stock.
Okay,
Sorry.
Rajesh, would you want to take this one and tell us the next targets that you see after this sharp move on the upside?
Yeah, very strong momentum in the stock, and almost stock is now on the upper fridge at this moment. So there is no opportunity left for buying side at this moment. If you get again, in the decline towards 140, 138 zone, it's a good level again to re-enter in the stock. As overall structure is bullish, stock is enjoying almost all-time high trajectory. So buy on dip should be your strategy. 135 should be your stop loss. I think stock is already logged for upper circuit. So
Yeah.
if it's give you opportunity in the decline, you can buy again.
Okay. But Mr. Bulinshkar, any other stock from the defense pack that interests you at this point in time that you still believe there is a lot of value despite the kind of move that we've seen in the previous somewhat?
So I think, most of the defense stocks have kind of have rich valuations. The one I would be banking my money on as a part defense stock play is BHEL.
BHL. Okay. And the targets that you'd have for BHL?
Uh, I think the stock is doing quite well. It's taking out a lot of resistance levels, and we should see the stock move to 180, 200 levels.
Wow, 180 to 200 levels. Even today, it's up by 2% odd, 140.3. BHEL stock is something that you can keep an eye out on. Before the market's opening, we were discussing about the banking space, and we discussed the PSU banking space. Mr. Bulinshkar, I wanted to understand from the private banking space as well, your thoughts with the kind of lackluster move that they have shown in the previous somewhat so far. But do you think they are going to be playing catch up now, and any particular stock that you would be betting big on from the large cap banking space now?
So from the large cap banking space, we would continue to be bullish on HDFC Bank. It offers a lot of value. And apart from that, one stock which you should not ignore is going to be RBL Bank. There's a lot of
Okay.
momentum out there, and it's really going to surprise investors on the upside with the continuation of the momentum.
Okay, let's talk about the top mover stock on the Nifty index today, ONGC. That's the stock that's taking away, 1.5% higher in trade. And of course, brokerage houses have put out positive brokerage reports as well. Morgan Stanley, for example, had an overweight rating on this stock with a target price of 216. Right now, it's hovering at 202 odd levels. They do believe that the production growth after more than a decade of decline is key for ONGC's next leg of outperformance, and the management's call has highlighted that it is now largely de-risked as well. Rajesh, what would be the next target that you would have on ONGC?
So very strong momentum in stock. Continuously, stock is showing good buying interest, and now stock is poised to give breakout on a monthly chart also. Looking at overall structure, we believe that this momentum can continue further higher as overall structure across all time frame is looking bullish. Series of high top, higher bottom formation on the daily chart. So we expect this momentum can extend towards 218 to 222. So those who have already bought the stock can hold their position with stop loss of 196. Even for trading perspective, also one can look at to buy this stock for trading target of 215. So we are bullish on ONGC, and we expect further more momentum on the buying side we may witness in coming trading sessions.
Okay, got that. Let's discuss a few stocks now in the FNO space that are showing a lot of strength. One stock, Mr. Bulinshkar, I wanted to discuss with you first, and then I'll take the target with Rajesh also, is IEX, Indian Energy Exchange. That's showing some momentum in the FNO space, 1.7% higher. Last 5 days, the stock is up 4%, despite the overall underperformance that we've seen on a last 6 month, year to date, or even last 1 year perspective as well, at 137.8 odd levels, would you be looking at this stock positively? Because a lot of news flow has been rather negative for the company in the recent past, sir.
So, a couple of things that we need to keep in mind is that India's electric consumption is only going to rocket. Number one. Number two, base load, production is continuously falling, lagging consumption. So there is going to be power trading. There is going to be volumes going up, and that is going to aid this stock to move up much ahead. And this could be a very good time to buy into the stock, given the fact that these fundamentals are going to play out very strongly.
Okay, a good time to accumulate this stock. Rajesh, what would your next target be for IEX if you track this stock?
So underperformance is there in the stock price, but after this underperformance, now stock is recovering. This is the third consecutive week where we are seeing stock is making higher high-low formation. That shows that sustained buying is taking place. But still, we believe that 145 to 148 is the key resistance supply zone for the stock on the higher side. So that could be the near-term target for the stock, 145 to 148. If at all stock crosses those levels, then there would be a big short covering action we can see in the stock. So till the stock not crosses those levels, one can try to book some profits around 145 to 148. Your stop loss at this moment to hold long position is 133.
Okay, Rajesh, you talked about Chambal Fertilizers as your pick. It's now almost the top gainer on the FNO space, 4.5% higher, and it's now trading at 320 odd levels, 313.95 in the cash markets and 320 in the FNO space. What would your next target be for Chambal?
I think the breakout is already there, and most of the fertilizer stocks are showing good traction. So I think these rally may extend further higher. So one can look at to hold this fertilizer stocks for positional perspective also, as whole sector is showing good traction. So we believe that those who are positional traders, they can hold this position for upside target of 335 to 340 on the higher side. Your stop loss should be at around 305. For trading perspective, 325 is the target where one can book profit.
Okay, so your call as well as Mr. Bulinchkar call is doing very well. BHEL he talked about 2.7%, in fact about 2% higher in the FNO space today. That stock is also moving up. Rajesh, if you could give us the target for BHEL, the medium to short term target for BHEL right now at 140 odd levels.
So very strong chart structure across all time frame. On the weekly chart, stock has given again fresh breakout of consolidation of almost 7-8 weeks, and this fresh breakout is clearly indicating that now this stock may head further higher towards 155, 160 in the short term. So one can look at to buy and accumulate this stock for short term trading perspective. Your stop loss at this moment should be around 132, but we expect that this stock may exceed the target of 155, 160 also in coming months. But for trading perspective, one can eye for the target of 155.
Okay, Manappuram Finance, that stock continues to shoot up higher for the second day in a row, 5.5% up in the FNO space, a very, very strong move coming in. Mr. Bulinchkar, how would you really look at these gold financier names at this point in time? The festive season has been on, and of course, there was a lot of demand for gold, gold loans as well. In fact, we did see trade data yesterday that talked about how October gold imports also had shot up pretty sharply, 95% year on year as well. Your own sense of how would you look at these gold financier names at 158 odd levels, Manappuram Finance, 5.5% higher?
I think it's in a very strong uptrend, and there is a lot of institutional interest in the stock. So I believe that this stock will do well in the coming days. It is one of the top momentum plays in the finance space.
Okay, let's look at the top Nifty 50 gainers at this point. It's all energy, oil and gas names now, taking it away. Almost 2% higher for NTPC. Now the top mover on Nifty. ONGC follows next. BPCL, Coal India. These are the top 4 movers as far as the Nifty is concerned. So clearly the energy basket really taking it away. Mr. Bulinchkar, your call on NTPC. It's been a great year for NTPC in the last one year or so. Do you think the momentum can continue for NTPC?
Absolutely, with NTPC's renewable energy program playing out quite nicely. They've struck a lot of hydrogen export deals with Europe as well as with other countries, and this stock will continue to rally. And since it's a very large equity stock, I think that the play will take a little while, but it will continuously keep moving up.
Okay. All right. From the mid cap space, Mr. Palvia, you mentioned Bandhan Bank. Of course, that's showing some momentum on the upside as well. What's also showing, you're talking about, I think, DLF from the real estate space, but we're also looking at macro tech developers again taking positive zones as well. Anything on macro tech that you'd like to suggest? Any targets that you see for macro tech?
Most of the real estate stocks are doing good, and
Yeah.
Macrotech is Lodha developer is also looking promising. Though stock is consolidating since last 4-5 trading session in a very narrow price range. So looking at the near-term, short-term structure, if at all stock crosses above 875 zone, then this rally can extend towards 950 also. So overall structure is bullish. One can look to buy the stock at the current price also, even if you get any chance to buy near 845 840 zone. That's a good, again, good level to enter in the stock in the decline. Keep your stop loss at around 830. Upside target we are projecting on a positional basis towards 940.
Okay, got that. Mr. Pulinchkar, I wanted to ask you on the internet stocks. Today we are seeing PB FinTech in flavor. We're also seeing delivery in flavor as well today. These are the two stocks that are buzzing from the mid cap 100 basket. And yesterday also we did see momentum coming in on Paytm on the back of the inclusion of the MSCI Global Standard Index. Even Nykaa was moving up in trade. How have you seen these stocks after the earnings have been reported positively for the second quarter in a row for most of them as well? Any particular stock where you have turned incrementally bullish on?
So, the internet stocks as a group represent a positive trend given a couple of things. One is that, the interest rates are coming off, so the internet stocks tend to rally aggressively in this space. But amongst this, the stock which we like the most is going to be Zomato, which has got very strong credentials. Another factor that I would like to add on to the story is that all these stocks have reported earnings much better than what we have modeled in our uh, research outfit.
Okay, got that. Let's also look at some of the other stocks that are moving up as far as the mid-cap space is concerned. You're looking at Max Healthcare now showing some kind of a move on the upside. You also have Gland Pharma from the Pharma pack that's been moving up. You remember yesterday also we did see some of the mid-cap stocks like Ajanta Pharma, Glenmark Pharmaceuticals also moving in trade as well. Anything from the Pharma pack that interests you, Mr. Bulunchkar?
We have buy calls on Marksans Pharma. We
Okay.
like that stock a lot, and we think that that stock can continue to outperform the market. Very strong return ratio credentials, very strong growth, lot of cash on books, and valuations continue to remain cheap.
Okay. Mr. Palvia, I discussed this before you joined in with Mr. Bulinchkar on the Tata Group stocks, TCS ahead of the buyback news that's come in, and Tata Motors right ahead of the Tata Tech IPO as well. How would you be really looking at technically on those two stocks? Because, in the coming course of a few days itself, we will see the buyback kick in, and then the record date coming in on the buyback for TCS on November 25, and November 22nd, we will see the IPO of Tata Technologies open as well. The much anticipated and much awaited IPO where Tata Motors shares are also coming back into focus. How would you really advise investors to trade these two stocks, sir?
So clearly, Tata Motor is in uptrend, and looking at overall structure across all time frame, stock is showing strength, and we believe that Tata Motor can exhibit furthermore upside from the current level, even one can look at this stock to add in the portfolio. Also, buy and dip should be your strategy in Tata Motor. Overall, we believe that 750, 760 is the short-term positional target one can see in the Tata Motor. Buy on dips is the strategy. 625 should be your stop loss on the Tata Motor. TCS is still trying to recover from their recent low, but still looking at the near-term, short-term structure, the major supply zone for the TCS is at around 3480, 3500. Until this stock not crosses above 3500 level, we may witness some more sideways consolidation in the stock prices for some more couple of weeks. On the downside, 3350, 3360 is the good support area on the downside. So I think some more consolidation we can see in the TCS prices above 3500. Yes, we can see some more traction towards 3580 to 3600. But at this time, we believe that some more consolidation for next couple of weeks could be there in the prices.
All right. Thanks a lot, Rajesh, for joining in and for sharing all these wonderful insights with all our viewers. Mr. Bulinchkar, before I let you go, just last word on Suzlon, the top moving stock in the small cap 100 index. Of course, news flow has been positive in the recent past. We've also seen the inclusion of the stock in the MSCI Global Standard Index now, and the stock has been just rallying. Not to forget, the stock has been the biggest wealth destroyer over the past decade or so, but things have started to improve over the last few years. For the stock. Your own sense, how would you be looking at Suzlon?
Very, very bullish on the stock. Uh, Two, three factors. One is that, every year 10 gigawatts of capacity is allocated for uh, your wind power stocks. And that has its own space where they participate. There is lack of competition there. So I believe that this stock should do very well going ahead.
Okay, got that. Well, many thanks, Mr. Bulichkar, also for being with us and sharing all these insights on markets and several stock ideas that you've discussed. We will keep an eye out on all the stocks that you've discussed in trade today as well. Many thanks for being with us, and hope you have a great trading session ahead. And now let's shift focus to our corporate radar section. The guest on our show will be from Bikaji Foods. That's the company on our radar today. Mr. Manoj Verma, the COO of Bikaji Foods, now joins in to discuss the Q2 earnings that the company had reported last week, and also the outlook going forward amid the festive season demand as well. Good morning to you, Mr. Verma. Sakshi this side, good to have you with us on Business Today Television. Before we come to the earnings front, I wanted to discuss with you, we've just seen the peak festive season or the peak festive days go by just a few days ago. How did you really look at the festive demand that panned out up until Diwali and Bhai Dooj?
Yeah. Good morning, Sakshi, and thanks for inviting us for your show. Talking about Diwali, I think it was a fabulous Diwali, which we have had. I think post-COVID, last year was the first Diwali which came up, where people enjoyed, but people were a little apprehensive. They were not sure about how things would pan out. I think this year there was better preparedness, more excitement. Both trade and manufacturers, were well prepared, and I think there was more than enough shoppers in the stores, which is the actually, a proof of pudding or the moment of truth. I think it has gone up very well.
Okay, gone very well. Would you like to put a number to the kind of sales that you've clocked in, if at all you have been able to pencil that?
Yeah, so see, we cannot be talking of for quarter three numbers, but of course,
Sure.
this is, in high double digit, is the growth for gifting itself. That's what, is the numbers what we have delivered. And, talking about our numbers, I think it's more relevant, wherein sweets is a huge contribution, sweets and gifting both. This year, what happened was that Diwali was a late Diwali, so it was in
Yes.
November. Last year was in October. So therefore, last year quarter two was very big, and this year quarter three will be very big. Two this year, on a quarter two last year high base. So growth when you look at may not be as exciting. But I mean, talking on BKG in quarter two results, I think more importantly, if you look at stationery business growth in quarter two, it's a 17.5% volume growth, which is ever highest in quarter two. So, which
Okay.
is a very, very positive sign, good sign for the category. And at the same time, if you look at our sweets business in quarter two, because of very high base of last year, quarter two looks at a 12.6% degrowth. But you will see that when you look at numbers, quarter two and quarter three put together, our numbers will be well in line with what we have spoken or what we anticipate.
Okay. Mr. Verma, could you detail for us the current revenue contribution from both of your key segments, sweets and snacks? And going forward, are you going to be big on snacks itself, or do you also see the sweets contribution to increase?
Sakshi, for us, sweets, if you look at an annual level, is about 12% contribution. That's what is a annual level thing. But when you look at in quarter two and quarter three, this contribution goes up to beyond 25% also.
Yeah.
So 70% of our sweets business happens in quarter two and quarter three. So it's a very, very high on sweets business. To your second question, going forward, you will see that sweets contribution will only come down. It will not go up, because the
Okay.
capacities and the facilities what we have built for ourselves across country are more on namkeens and western snacks. So eventually you will see that the growth on these snacktionery will be higher, and therefore the share of business will be no will come down. Not, this does not mean sweets will not grow, but share of business will come down.
Okay. So, could you detail for us how are your margins in Q2, and what is your entire expectation for FY24 as margins growth? Any guidance that you've given?
Yeah. So if you look at last year, quarter one was one of the lowest gross margin kind of a stuff, which was in the tune of about 24%. This gross margin now has moved up to 32.9%. So that's the shift what we have done, and this progression you would see quarter on quarter kind of a stuff. With the ever highest EBITDA, what we have delivered is 14.4% in this quarter. Going forward, what we see is that our EBITDA margins would be somewhere between not less than 13.5% and around 14.5%. That's what is our expectation and guidance what we look at.
Okay. And any particular volume growth guidance that you can give us? How has it panned out in Q2, and what would your expectation be for the full fiscal year?
Yeah. So if you look at quarter two, volume growth has been 5%, right? And revenue growth was 5.5%. But as I said, that huge degrowth on sweets on account of last year huge base. At a pan-India level, a full year standpoint, if we talk about, so we would be in a volume growth of about 17 to 18, would say 17 to 19%. Between this would be a volume.
17 to 19%, okay.
Yeah.
And for the full year, which means that you would be clocking in higher in Q3. That is what you're betting big on. That is the best quarter that you're looking at, and Q4 as well. All right. Could you also help us understand then, your cash flow position currently, your capex plans currently underway to expand capacities, and what is the outlook there?
Sakshi, I think we have spoken earlier as well that we backed PLI incentive scheme, under which we had committed 440 crores rupees as an investment by March 24. Most of it is done.
Okay.
The last leg is left, which will get completed by February or March this year. And
Okay.
with this, we will be eligible for a PLI incentive scheme of 261 crore rupees to be given till 26, 27. That's what it is. So this capex would help us deliver a volume of business of about 1.6, 1.7x of what currently we are in. So we are future ready in terms of our back end or our capacities in this.
Okay. And what kind of product launches do we see? Any new product categories that you may be entering, which may further aid to your revenues and margins going forward, sir?
What we'll do is we will be doing some innovation in our namkeen category itself. You will see some new stuff coming in.
Okay.
Besides this, one frozen plant which is coming up by end of the year, and this is more to support our export business. But I think in some time you will see that this frozen will start contributing to our business.
Currently, what is the portion of exports versus domestic business as far as revenues are concerned?
So exports is pretty low. It's about 4% to our revenue, 3.5, 4%.
Okay, and do you see that improving over the next few years?
Yeah, this will go up over years. This will go up because this frozen plant is primarily to support our exports business.
Okay, fair enough. Could you also give a sense of, demand shaping up rural versus urban, and the best way to judge that is from the sales of your smaller packs versus bigger packs as well. So what has been the trend really when we talk about the smaller packs, say 14 to 18 odd grams versus family packs of 1 kgs, etc. What's been the trend like, so far in the fiscal year, and how do you see the demand shaping up rural versus urban?
See, quarter 2 was a little bit impacted now from rural business. More importantly, you would have seen it was early monsoon and then delayed monsoons kind of a stuff. And if any geography which is worst impacted or affected is the rural part of the country. So this is where there was certainly a little dip in that stuff. However, what we see going forward, this will pick up, and we have started seeing some positive signs in terms of demand when we look at.
Fair enough, sir. Well, on that note, thank you so much, Mr. Verma, for being with us on the show and discussing all these insights about your quarterly earnings and the business outlook. All the very best to you for the upcoming quarters as well, and hope to touch base again with you to understand more about the business outlook and the industry shaping up as well.
Thank you so much.
All right, and with that, we will quickly look at how the markets are moving at this point in time. 19,700, ladies and gentlemen, on your screens right now. So the markets are coming off the day's low, about a 0.1% higher in trades. The Nifty Bank back in the green as well, 0.1% higher, 44,264. So looking better as far as the markets are concerned. You can see NTPC, BPCL, ONGC, Hero MotoCorp, TCS and Coal India, HCL Technologies as the top movers in trade as far as the markets are concerned. Pharma stocks inching higher, Dr. Reddy's Sun Pharma contributing in trade as well. As far as the sectors are concerned, oil and gas are definitely the top sectoral mover at this point. Small caps follow suit, 0.5% higher in trade. Healthcare, IT, mid caps, FMCG now moving up in trade as well, about 0.3% higher. Realty and the private banks also looking positive, and most of the sectors are now coming back into the green, barring the metals pack that's 0.5% lower in trade. Of course, profits being taken off perhaps after yesterday's very strong move. Rest of the sectors have all come into the green zone, and that's a bit of a positive as well. As far as the top laggards of the Nifty are concerned, Bajaj Finance remains the top loser. Power Grid, Adani Enterprises, Hindalco, JSW Steel, Eicher Motors continue to drag the street from 0.5% lower in trade to about 1.5% lower in trade. From the F&O space, Manappuram Finance, second day in a row, F&O action, the top mover on the F&O space, 7% higher from the F&O action concerned. Chambal Fertilizers, MCX for the second day in a row, also moves higher in trade as far as the F&O space is concerned. You also have HPCL, Vodafone, and also stocks like IOC that are moving up as far as the F&O space is concerned. So that's as far as the opening action and the first hour action is concerned on the markets. We'll continue to track the market momentum for you, and you can do the same by being with us on Business Today Television. So don't go anywhere. Don't forget to subscribe to our channel, and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in. Sahara Group Chairman Subrata Roy passed away at the age of 75 after prolonged illness on November 14. Subrata Roy was seen as having a larger-than-life presence, having created huge business empire in retail, real estate and the financial services sector, also in aviation and media and much more. Under his leadership, Sahara also sponsored the Indian cricket and hockey teams and also owned a Formula One racing team as well. Roy had made the Sahara Group a multi-billion-dollar enterprise that counted itself among the biggest employers of the country. But Subrata Roy was also at the center of huge controversy and faced multiple regulatory and legal battles in connection with his group firms that were accused of circumventing regulations with Ponzi schemes. His troubles began in November of 2010 when stock market regulator SEBI asked two entities of the Sahara Group not to mobilize funds from equity markets or from issuance of any security to the public while restraining Roy from approaching the public for raising funds. In 2011, SEBI ordered two of the Sahara Group firms, Sahara India Real Estate Corporation and Sahara Housing Investment Corporation, to refund money raised from nearly 3 crore investors through certain bonds known as optionally fully convertible bonds or OFCDs. After a long process of appeals, cross appeals, the Supreme Court on August 31st of 2012 upheld SEBI's directions asking the two firms to refund the money collected from investors with 15% interest. Sahara was eventually asked to deposit an estimated 25,000 crore rupees with SEBI for further refund to investors, though the group has been maintaining that it had already refunded more than 95% of the investors directly. Once asked for a proof of repayment, then Subrata Roy had famously sent across 100 truckloads of documents to SEBI, triggering a unique warehousing crisis for the regulator. In another incident, a man from Gwalior threw ink on Roy's face and also called him a thief when he was brought to the Supreme Court in his trademark waistcoat and tie amid chaotic scenes. Subrata Roy was arrested in the year 2014 on the orders of the Supreme Court after he failed to appear before it in a contempt case arising out of the non-refund of more than 25,000 crore rupees to investors by two of his companies. The big question now is, what will really happen to the 25,000 crore rupees of undistributed funds still lying with the capital markets regulator SEBI's account now after the death of Sahara Group's chief Subrata Roy? According to the capital markets regulator's latest report, the SEBI has issued just 138 crore rupees in refunds over 11 years to investors of the two Sahara Group firms. In the absence of claims from a majority of the bondholders of the two Sahara Group companies, the total amount refunded by SEBI has also just inched up 7 lakh rupees during the fiscal year of 2023, while the balance in SEBI Sahara refund accounts has actually risen by over 1,087 crore rupees during the same time. This amount, remember, had stood at 24,076 odd crore rupees back in the year 2020, then 23,191 crore rupees before that, 21,770 crore rupees before that as well. But the amount has been rising now with the interest getting accumulated with this account as well. Meanwhile, the centre in August has also started the process of refunding 5,000 crore rupees of depositors whose funds are stuck in 4 cooperative societies of Sahara Group. Before this, we also heard that Cooperation Minister Amit Shah had also launched the CRCS Sahara Refund Portal in the month of July to facilitate the return of the money to investors. Around 18 lakh depositors have been registered on the portal right now. In March, the government had also announced that the money would actually be returned to 10 crore investors of the 4 cooperative societies within 9 months. Well, all eyes will continue to remain on how soon and how much of this fund will actually go to the rightful owners of it as well going forward from here. But right now, there is a big question mark on this huge mammoth amount of funds lying in SEBI's account, 25,000 crore rupees.
If you like the video, do like, comment, share and subscribe.
Where do you see value at this point of time given the trajectory of the markets from now on? Shell, we are positive on real estate and automobiles, and within the real estate basket, we like a company called Anantraj Limited. Now, the reason why we like this company is basically because apart from the cash cow real estate business, they operate in Gurgaon, where they have a land bank of almost 150 acres. Most importantly, the real estate business is growing steadily. Last year, the top line for this company was roughly about 1,000 crores with a profit after tax of 150 crores. In the current 6 months of financial year FY24, they have already recorded a profit of 110 crores. And the better news is that already Anant Raj has invested a lot of money, capital in the data center business. Now, data center business is a futuristic opportunistic kind of market, where they have built a installed capacity of almost 300 megawatts. Recently, they have operationalized 6 megawatt, and the game plan by the company management is that by March 24, 21 megawatts would be operationalized. I think by next year we could see a top line of at least 250 to 300 crores coming in purely from the data center business. And in terms of the current year profitability, we expect a bottom line of around 230 to 240 crores compared to 150 crores last year. So earnings growth over the next 2 years is going to be very solid. So here, we have been advising our clients to actually buy at the current odd levels. We expect a target price of around 350. The other stock is basically Tata Motors, which we feel is going to be benefited by two things. One is the increase interest in electric vehicles, where the company holds a market share of almost 40%. Plus, JLR has now come back into top gear. We've seen that free cash flow has started getting generated. The management is also pretty confident. And in the very short term, on November 22nd, we'll be having Tata Technologies IPO, where a lot of value unlocking would come in for Tata Motors. So I think looking at the fact that Tata Motors DVRs has also been included in the MSCI index, that also could be a short-term trigger for the stock. We are looking at a target price of 750 over the next 12 to 15 months.
If you like the video, do like, comment, share and subscribe.
Hello and welcome. You're watching BTTV. I'm Tanya Aneja. Well, today let's talk about a stock that is in focus, and I'm talking about Coal India. Well, shares of Coal India are on a roll after the company reported better than expected second quarter results. The stock is up over 50% in the past 6 months and over 100% in the last 2 years. Now, remember, the stock was in fact among the top Nifty 50 gainers in 2022 as well. So let's take a look at the financial performance of the company first. Well, the state-run miner posted a 12.5% jump in its second quarter profit to 6,800 odd crore rupees, and that was driven by higher sales and improved joint venture profits. The JV profits have actually turned positive at 89.75 odd crore rupees from a negative 140.75 odd crore rupees last year. The board has also declared an interim dividend of 15.25 rupees per share for FY24, with the record date set for 21st of November. So as an investor, you must be wondering that what's really next for this PSU counter. Well, according to experts, Coal India has maintained its FY24 target dispatch to the power sector at 610 million tons because of the huge demand from the power sector. They even see further improvement in performance in the second half of this financial year. Jefferies India has upgraded this PSU stock to buy from hold and increased the target price by 19% to 385 rupees per share. Motilal Oswal has also increased its target price on the Coal India stock to 380 odd rupees level and retained its buy rating, while Nuvama has maintained the buy call and hiked the target to 404 rupees from 323 earlier. Now, according to Jefferies, India's strong economic growth outlook and rising power consumption have triggered a higher demand for coal, which should fuel healthy growth for Coal India in the coming years. Improved volume growth and lower than expected cost trajectory have also significantly improved Coal India's earnings outlook. According to Nuvama, Coal India can benefit from operating leverage as employee costs are expected to remain lower than FY23's levels through FY26. The company's earnings have fundamentally improved and it's poised to generate significantly higher EBITDA going forward as well. Now, lastly, Motilal Oswal Securities has also increased its EBITDA estimates by 16% and 13% for FY24 and FY25 respectively on the back of strong performance, improved outlook on volume, e-auction premiums and lower cost. So that was all about Coal India, but stay tuned to BTTV to know more about these buzzing stocks.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, our focus will be on the Q2 earnings. The company on our radar today is Biocon Biologics, and the company's top management, Shreyas Tambe, Managing Director and the Chief Executive Officer of Biocon Biologics, is here with us to decode some more insights from the earnings front and the outlook going forward. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, a strong quarter for you. You've nearly doubled the revenue in the second quarter to 1969 crores. The EBITDA has grown by 112% at 453 crores as well. Healthy margins, you've reported 23% odd. Could you detail for us what really worked for you in this quarter and what's the outlook that you see?
Yeah, first up, thank you very much, Sakshi, for having me on your show. And you're absolutely right. It's been a good quarter for us. We've for Biocon Biologics, revenues have doubled over last year, same quarter, largely on the back of the acquisition that we've completed from Beatrice now. Clearly, that's played a role. But in addition to that, we've had growth across all commercial products that we've had in almost all geographies, in the US, in Europe, and in emerging markets as well. What I would say is more important than that is the health of the business is indicated through what we've called as the core EBITDA metric. And that stays at 34%, which is around that mid-30s that we've guided for. And with an 11% investment in R&D, which is quite significant, our EBITDA remains in the mid-20s. And that's something that we believe is a good indication. Now, having transitioned North America on September 1, which is we are running a large part of the business ourselves, and with Europe coming up next, this bodes well for the future.
Absolutely. So since you're talking about the different geographies, North America, Europe and emerging markets, could you break it down for us? How has the business shaped up in this quarter for all three key geographies of yours? And where do you see maximum revenue contribution emerging out from? Which is the geography that is likely to emerge as the best performing geography for you in the coming quarters?
Well, all geographies have been important for us, given that we started off with the base from emerging markets. That's been our mainstay. And right now that contributes a fourth of our business. So that's very important to us. In addition to that, US and Europe, that's been the big focus post the acquisition. And we've seen that the three products that we've had commercial in the US have grown significantly over the last year in market share, with our pegfilgrastim biosimilar, which is Fulphila, doubling its market share from a little under 10% to almost 20% now. So that's a very significant jump. Our insulin glargine has been doing very well. Semglee is the brand name, and that's been performing at a very good clip. And Ogivri, which is our oncology biosimilar for trastuzumab, has held on to a very strong market share despite heavy competition. So I think US, which is roughly about 50% of the overall value, including Canada, we've now transitioned and is slated to grow well. So that leaves us with Europe, and that's a good base for us to build from where we are at this point.
Okay, let's also discuss about your new launches. You've reported 4 launches and 11 approvals in the emerging markets. How soon will these start to begin to show up in your books as well? What revenue contribution do you see from these? And also, could you detail for us the pipeline going forward as far as product launches are concerned?
Yeah, just want to give some color on the 4 launches that we've talked about in emerging markets, and we've also got new approvals in these markets. These are for existing products that we've already got approvals for, and we would be launching them in different markets. They will drive revenues immediately starting next fiscal. So that's an immediate tick which we expect to see in the coming fiscal. But what is really very important, Sakshi, and I want to share with you, is that we are looking to launch 5 new products in the next 2 years, and that's really what the overall company is focused on right now to get the 2 products that are right now under FDA review, which is Aspart and bevacizumab, and then 3 products which are under various stages of clinical development, which is our biosimilar to Stelara, which is ustekinumab, the biosimilar to Prolia, Xgeva, denosumab, and the first to file status that we have on biosimilar to Eylea, which is aflibercept. So these are all blockbuster molecules, and we're looking to launch 5 of these in the next couple of years.
Okay, that's wonderful to hear, and we shall continue to touch base more about how the progress of this. We will continue to check for all our viewers as well. But on important Viatris integration that you've talked about, that's happened ahead of schedule for you, and that's extremely important for you as well. Tell us, what does it mean for the company now that it has happened ahead of schedule? Would you also be looking at an earlier listing of the biosimilars company and the IPO, because that was the initial thought process that once the integration is complete, you will be now looking at the IPO. So how do you pan out now?
Yeah, no, that's a great question, and I think this integration was is a very important step post the acquisition, because our mantra has been consolidate the business that we are acquiring, preserve value in terms of what we've done, and then look at growth from this point on. So that's really been what the team's been focused on. Looking at where we started post the transition or transaction completion in November of last year, we had no presence in any of the advanced geographies. We had no presence in the US, no presence in Europe, and in several other emerging markets. For the team to have been able to complete that transition in 9 months from the date of closure of the transaction has been nothing short of phenomenal. And thanks to our partners, which is Viatris, the advisors that we've had in McKinsey and others who've helped us get through this, and an amazing team effort, which has allowed to now take charge of over 50% of the business, like I said before. And we're looking now to complete this entire transition of the business over to Biocon Biologics before the end of this fiscal year, and Europe maybe sooner, before the end of this quarter. So that's a significant acceleration, puts us in a very good place, given that now it is important that you have control of the business that you intend to list. So this, as we've said in the past, was an important checkbox that we needed to be in place with, and I think we are doing that ahead of time. So we feel very good about this. And once we've been past that integration of the entire business, Sakshi, we'll talk to you about what those next steps could look like.
Okay, fair enough. Well, also, the company has entered into a definitive agreement with Eris Life Sciences recently for divesting the dermatology and the nephrology branded formulations business units in India for 366 odd crore rupees. Could you detail for all our viewers, how will this really help you unlock value?
Yeah, and this was a very important step for us, because if you remember, we've always grown our business organically. So part of our journey was to get to Biocon Biologics was through the small molecules path. And there's a large part of our business which wasn't really core to us, given that now as Biocon Biologics, we had clearly identified diabetes, oncology, and immunology as our core therapy areas. With these being our core therapy areas, we looked at our overall portfolio in the branded formulations India business, and that clearly listed the nephrology and dermatology small molecules products as in many ways non-core to our next development from here on. These were not products that we were developing or manufacturing for Biocon Biologics. It was, however, something that we had developed over the last 10 years. So they were very powerful brands. We had leading positions in many of these. Many patients and physicians dependent on these brands. And we found a very good partner in Eris Life Sciences who was very keen to build these and take them forward. So having said that, we also made sure that we were able to transition all the 120 employees of this division over to Eris. And of course, we got a great valuation for it, which is 4x of its revenues and 22 times the EBITDA, which I think was a very good transaction for both companies.
Also, one last question that I had with you is on the company receiving the marketing authorization from UK's Medicines and Healthcare Products Regulatory Agency, the MHRA, for Yesafili, which is a biosimilar of aflibercept. Could you tell us, what would this really mean now, and how would that also look to translate onto the books?
Yeah, and I think that's a very positive, important development. It's very recent, and you picked it up. This comes on the back of previous approvals that we've received from Health Canada, and then in the recent past from the European Union. So it just further strengthens our confidence in the science that we've developed for Yesafili, which is our biosimilar to Eylea, aflibercept. So clearly it's a great product. There's a lot of confidence now with global regulators accepting it. We are currently in litigation, of course, as you know, with the originator, and once we get past that, we would be looking to launch this product in the US and in other geographies, as we've now starting to get approvals post the appropriate date of launch.
Okay, well, on that note, thank you so much, Mr. Tambe, for helping us understand more insights about your business. Congratulations yet again for a very strong quarter, and all the very best for the upcoming quarters, and hoping for more interactions going forward to understand deeper insights from the business outlook as well.
Thank you, Sakshi.
All right, and with that, we will quickly wrap up this special edition on the earnings front. But do stay tuned on to Business Today TV, as a whole lot more continues to be on your screens from the world of business and stock markets.
Mr. Ashish Bhandari, MD and Chief Executive Officer, joins us with his presence on Market Today. And it's been a very, very strong performance coming in from Thermax. Remember, anything and everything that goes into the back end of factories, especially on the heat sustenance side, is made by Thermax. Mr. Bhandari, welcome. Good morning. How has the past quarter been, and how do the next 3-4 quarters look to you in terms of order book?
Very good morning to you and to all your viewers as well. And thank you for the kind words about our performance. I would just add that as a company, we're not just at the back end and not just in heat recovery solutions. Almost anything relating to energy and energy transition, from a capability set, whether it is heating, cooling, water conservation, air pollution management, variety of different solutions, renewables across the portfolio, Thermax would have a role to play in. In terms of performance, the last quarter was satisfying on some counts, and on some other counts, I would say we still have work to be done. The good part was, of course, the overall stability in the market that allowed us to put out a good set of numbers on revenues and on profitability. Yeah, which is a commitment that we had made, that we wanted to continue to take the business towards